Good day. We're live and in living color. This is Howard Martell, known as the Home Profit Coach here in Hampton Road, Virginia, where we are going to continue to talk about windfall tax savings approved for you small home-based business owners from my good friend who passed away to be with the Lord about 2 years ago, Mr. Ron Mueller. Dr. Mueller was an incredible influence on me in understanding the tax benefits we business owners get. So we're going to continue on. We're on chapter 10 right now. We did skip some chapters that you can easily get this information from. Um, the new tax code section 199A. Before we get started, this is brought to you by Acai Elite Plus. Also, it's brought to you by, and we'll have my banners. Just wait down below, tickler. There we go, right down below, right there. If you're international and want to check out the Voyager, that's our digital product that is global. You can join us today and lock in your timestamp with our new One Marketplace launching in the second quarter of June 2025. How would you like to get paid on shoppers all across the globe? And you don't even have to know them. All you have to do is to be able to share your link to the world and let the cash roll in. Well, you're going to have to be targeting to a specific niche market. Let's just say that. So, this has been brought to you by R3GTeam.com, the team that makes a difference in your life. And of course, welcome to the Home Profit Coach Ministry in the Marketplace. That's what it's about, people. It's about showing financial stewardship of what has been provided to you by the Father, by God. So let's get to it. The huge new tax deduction first became available last year. This was in 2020 and will continue for at least 5 years. Implementing the deduction requires creation of a new section of Federal Tax Code Section 199A. Now, as we hit 2025, this is getting voted, hopefully be permanent into law. This is the new tax code section 199A, 20% tax cut for you small based business owners. But the key is 3 things you need to have. 1, you need to have a legitimate home-based business. 2, you need to show the intent to profit in the United States under our tax code. You need to work your business anywhere from 30 to 45 minutes, 3 to 5 times a week. I highly encourage you to work it every day because the more that you work it, the more potential for return on investment and the more tax savings you shall get. So, in a nutshell, here's what Section 199 does. It allows most pass-through entities to pay 20% less taxes on all qualified business income subject to restriction. Let's define some terms. What is a pass-through entity? The term refers to sole proprietorship, LLC, partnerships, and S corporations. These are business structures, entities that for tax purposes passes a business income through to the owner to be taxed at the owner's individual tax rate. What is a qualified business income, or QBI? How Here's how to compute its value. Begin with a business net income shown on your Schedule C. Subtract the self-employed health insurance premiums from 1040 line 29. I'm not going to go through all these. You can read this or you can look it up. What are the restrictions on qualifying? Tax Code Section 199A states that 20% reduction in taxes shall apply to the qualified business income, which we just defined as all pass-through incomes, also defined above, as long as the owner's total taxable income from all owners' income sources does not exceed 157,500 for singles and heads of household 315,000 for married filed jointly. IRC 199A, B, 3, and A. So if you're owner of a business that is a pass-through entity, I have one of those. I'm an S corp limited liability company, and if you total your income from sources is no greater than 157,500 for singles and 315 for joint, you qualify. If the above paragraph defines you, most of what follows in this chapter will not apply to you. However, the rest of you keep reading. Who cannot use the deduction? There is one category of pass-through that is excluded from this deduction, but only if both is applied. If your total tax income from all sources exceed the limited shown above, and also if your business classified as a specified trade business. Here's your specified trade business in the tax code 1202 Echo 3 Alpha. healthcare, accounting, consulting, investing, partner interest, legal services, actuarial science, athletics, brokerage service, commodities, architectural, performing arts, financial services, security. Guess what? Howard's none of those, so I get all the bennies, baby. And I hope you like my professional background there at the Home Profit Coach Inc. LLC. We're all about professionalism. In addition to the above, the term specified trader or business also applies when the principal asset of the business is a unique reputation or skill of the business owner or the employee. Although there are no clear definitions of the term specified trade or specified business, what all the above seem to have in common is that they perform services only. They do not create or sell products. See, Howard creates products, but he also sells them, both digital and traffic sources. You want some incredible traffic sources? All you got to do is go onto my page. You'll see what I'm talking about. I do have the links to that. Or you can go to my Facebook page, facebook.com/Howard Martell, to follow me. I will follow you back. Just let me know if you have questions. Of course, because there's a tax law we're talking about here, there must be some illogical, unexplained exceptions, right? You will not be disappointed because here comes the exception. Specified trade or business does not apply to architects and engineers, nor to business operating a hotel, motel, B&B, hostel, or restaurant. And one more, the 20% deduction is intended to apply to rental income. Last minute change was added to the act specifically to accommodate owners of rental properties. Isn't that beautiful? That is beautiful. One more category. Remember, however, that being classified as a specified trade or business does not itself exclude you from the 20% deduction unless your total combined income is above the threshold given above. What happens in case a business that is not specified trade or business, but whose owner total taxable income is higher than 157,500? And of course, we went through that. For more information about the QBI, go to irs.gov for those United States people who need to get your side hustle going on. You got to understand, there's going to be chaos. There's chaos with the new administration coming in and doing things outside the box, which I love. I love the chaos that they're bringing because they are doing the will of the American people. Without getting too political, I'm telling you, if you're not investing in precious metals, I'm about to call my dealer later on when he is in the office and buy some more silver. Why? Because Howard understands the value of an asset. An asset, precious metals is an asset. It will accumulate in value based off how much money is being printed from the U.S. government. Of the 53 major tax changes made in 2018 Tax Cuts and Jobs Act, the taxation of pass-through entities is clearly the most complex. The reason is lawmakers identified a number of ways in which the special 20% deduction could rise to abuse and gaming the system by taxpayers angling to avoid or illegally reduce their taxes. So the complexity is due to adding in the number of anti-abuse clauses and limitation restrictions to guard against tax cheating. Although it's been in place for more than a year now, Section 198 is still in its infancy. Okay, so you still have tax codes and everything. Another important detail. The 20% tax deduction can apply only to profits of pass-through. If your business is showing a net loss before applying the 20%, you get no 199 for that tax year. The deduction may not be used to cause a net operating loss and may not be rolled forward for use in profitable years. So that was Section 172C, which is fine. That's great. You're not gaming the system. Note, however, the 20% deduction is intended to apply to rental income. A last-minute change was added to the Act specifically to accommodate rental owners. But what about? The chapter has been but a general overview of the very complex piece of legislation. There are numerous questions not covered here, such as how to use deduction with multiple business, what to do if one pass-through business is a specified trade or business or another one is not, phase in, phase out details, what business structures under the 190-day, a deeper understanding of Code 199A. I recommend an excellent 40-page special report called 199A, How to Maximize Benefits by well-known IRS expert and tax advocate, Daniel J. Pillett. Daniel's material is incredible, people. I'm going to tell you this. To obtain a copy of the 40-page guide to understanding using 199A, it says go to the Resource Center if that's still available. So let's see what we got here, too. We're talking about food and beverage. Tax implications of owning cryptocurrency. We're not going to go into that because I'm not into cryptocurrency. I hope you're not either, but, so be it. Let's see what else we got here. Reporting your virtual record keeping. Went through that. Do this chapter 14. I'm just trying to see what else we can get. This might be a short one today. 6 ways to bulletproof your tax return. Bulletproof, as we use in the term, this book does not mean you will never be audited. It means that you're audited. You have the IRS compliant records to validate every legal deduction. Other than random selection by the computer, the number of reasons IRS has taken a particular interest in tax is math errors. No kidding. Number 2 reason, incorrect Social Security number tax form. When taxpayers hear the word audit, they get the same in the gut feeling they get when they took in the rear view mirror and see flashing lights behind them, and for good reason. Disallowed deductions, interest, and penalties for IRS audits contributed a massive $50 billion to the federal treasury last year, and this year will no doubt be at least bigger. Let's first put audit in perspective. Audit is, according to IRS, nothing more than an attempt to see if you reported all your income accurately and if you qualify for all deductions you claim. Consider this. If you're driving 65 miles an hour in the zone, you're having nothing to fear if your highway patrolman uses radar to check your speed, right? Well, likewise, if all deductions are claiming your tax return are legal and adequately documented, there's no reason to fear an audit, right? So they talk about that. Maintain the required documentation does not have to be tenuous and does not require a high-priced CPA to do your bookkeeping, although I do highly recommend a professional bookkeeper and does not take a lot of time. Here are the 6 most important steps every taxpayer should take bulletproof their tax return. When documenting deductions, be sure that you produce proof that you incurred the expense, which is usually going to be a copy invoice or notation in your scheduling calendar or daily diary. So keep copies of checking account statements attached to your invoices with business checks and with all expenses you're deducting on your return. Now, with everything being like ACH and digital, keep receipts of that too. Your bank gives you a statement for all your accounts, especially for your business account. Just keep those. Same thing with your credit cards. Everyone has a smaller home-based business should have a separate checking account. That is so crucial. Okay. If you hire a children's spouse, make sure you have an EIN number. Make sure that you are paying them specifically through a check, and then you separate. Like, say if they out of that, you give them a certain amount of money that I talked about. Like, say it's $10 out of that, out of the $65 or whatever you're paying them, and then put the rest into a high interest bearing account so you can pay for those vacations, car, private school, all that stuff we talked about earlier. Why you should never attend your own audit. You never want to show up in person. Have a representative that can speak to you. Never, never, never. Always have a CPA or enrolled agent or tax lawyer who has lots of successful audit experience appear with you or preferable in your place. If you try to go alone, here's what you expect. First, you'll be walking to adversarial climate where you know, and they'll remind you that you probably have missed incomplete records, a bully attitude, and heavy-handed tactics. They'll fire questions after questions in tone that implies that you should have immediate answers. If you take a minute to think about it, after all, they're questioning details you filed 2 or 3 years ago. They'll give you the look, the one that says, I know you're guilty, so don't try to weasel your way out of it. They lead you on like skilled lawyers into saying things that will cost you deductions. No one has perfect records, but IRS auditors can make you feel like you are among the worst ever. Audits brought in $50 billion to the U.S. Treasury last year. Most of that came from not people from trying to cheat. It came from honest taxpayers who didn't keep all the records and were spoke before thinking while in the pressure cooker. Don't attend your own audit. Get representation. It pays to get representation. Why would you put yourself through another if another is another way? If you have a CPA, as example, attend your audit without you, the auditor can put you on the spot. If you're not personally present, you cannot answer questions about parent discrepancies. But if your auditor asks a representative question, he or she does not have the answer. He'll say, I don't have the answer, but I'll glad to get the client. That buys you time to think about the answer. Meantime, remember the truth. Without a heavy-handed auditor breathing down your neck, you need to think you have all the answers. There is another big reason to have a tax professional represent you. The whole climate changes when auditors meeting alone with a fellow professional as opposed to meeting with a lying, cheating taxpayer. A really good tax pro who is experienced in audit represent will quickly get an auditor's feeling that the rep is there to help determine the accuracy of the tax return. That gets the auditor a bit more relaxed, feeling that we're both on the side of the truth, justice, and the American way. Have no doubt, however, your tax professional is representing you in your interest only. It's just that the more he or she can put the auditor at ease, the better outcome will likely be for you. Nothing to fear but fear itself. If you use one of the systems reviewed in Chapter 11 to keep IRS compliant records, I use a company called Hurler.com. I pay a measly $10 a month. You can pay the yearly fee if you want to. I pay $10 a month, and it's IRS compliant. It does my mileage and all my expenses. And it learns at the same time. It will differentiate between your personal and your business. And then what you do, I itemize it. I bring it to my tax preparer. That's it. And that'll be happening next week. However, if you audit, your chances are one of one. If you're following the rules, you have the required records. There's nothing the auditor can find. So there's something good news about having a random audit. What triggers an audit? Majorities are random audits, which means the computer picks you randomly, not for a reason. Many audits are correspondence audits, right? They send through the mail. Disclosure statement, the most powerful protection in the audit. What you're doing is you're using Form 8275 called disclosure statement, which you can attach to the return. It can be called, let me explain the note, because that is what you use for it. Since the tax return are processed by computers, you are drawing attention to yourself by attaching. No human being, hey, look at this one. When the return is reviewed, the reviewer will see the disclosure if you explain. To even put more power under the penalty, I swear that above is true, accurate, and complete, the best of my knowledge. And then have the signature form notarized. The word under penalty of perjury means if you prove that I'm intentionally lying, I know you could prosecute. Do you think disclosure statements might even more be believable? Notarized statement at the end, telling the truth, there's no risk in adding the statement. The most powerful, but at least understood, most use of IRS forms is 8275 disclosure statement to prove the unprovable. It calls a form that tells them the answer so they don't even ask the question. Oh, wait, a person could say my word is my bond and my handshake is my commitment. Not anymore, especially not with the IRS. How do you prove that your home office is exclusively used for the business? How do you prove the kids actually performed the work? Audits aren't the only way you can get their hands into your wallet. They talk about different ways of how they can send to it. Don't fall for this. Do this instead. The key to challenging correction notices is remarkably simple. You must write a short letter declaring that you disagree with the IRS opinion you owe additional money. The authority response for the Internal Revenue section, which reads, a taxpayer may file with the Secretary within 60 days after notice is sent under the paragraph request for abatement of assessment specified in such notice and upon receipt of the abatement is a process of canceling debt, and though it never existed, and they are forced by their own regs to do it. Very few taxes are simple this. You have 60 days from the date of notice and respond by filing a request for abatement. If you do, the IRS has no choice but to abate the thing. And it gives you the information here. It gives you the information here. And it talks about how you can get more money if you're working your W-2 by using payroll deduction. Pretty simple. And that's explained in here too. So it allows you to get more money up front, right? But you're also getting the tax benefits. So let's go back and for how could you save in your taxes? Let's add up. Flip that to chapter 4. How many dollars worth of expenses did you calculate to be able to qualify as tax deductible business expenses for your home as a principal place of business? Chapter 6, hiring of children. Chapter 7, will you be employing your spouse in your business, giving him or medical dental expenses? Chapter 8, how do you estimate you'll be able to write off business use of the vehicle at bare minimum number of business miles if it is per business mile in 2019? Talks about that. Chapter 9, how do you estimate to spend on your business travel? Chapter 10, if your business is sole proprietor, I want that. And finally, out of all the legitimate business mentions that didn't fall into any category on line G. And it gives you the examples here. Talks about the new W-4 form and online payroll tax withholding calculator. There's just a lot of information here, and I can't wait for Sandy Lynch to come up with what her latest legacy is going to be for Ron to have all this put into place. This is an incredible book. Now, you probably can't get it anymore, but I can tell you I got that special edition, and I can't wait for our good friend Sandy Lynch to be able to give us that legacy that Ron's provided. If you don't have a home-based business and you wanna check out what Howard's doing, I'll give you some examples. Let me share the screen. I want to show you what I have. So hold on a second. Just bear with me. Bear with me. I'm looking for my page. Oh, here we go. Boom. This right here is what we call a landing page, right? This has the power of a sales bot or a AI chat system right here. Ask a question. what is this site about? See? And then you go send. You have a conversation. And then it's thinking, the AI is thinking, said, and it talks about it, right? How can I join? Boom. And then it asks certain questions and it's trained. And this is provided with my other company that I've been with for almost 16 years. And look at that. Boop, 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 tells you everything how you can join, right? Um, and then what you do is you can get out of this. And as you can see in here, we have information about my one marketplace that I'm proud of. This is an explanation. It's a working place in progress. This week, we should have a graphical landing pages that you'll be seeing all over the internet. Now, if you want information about this company that provides tools, traffic, and training, it's been around for over 30 plus years. Just put in your name and email address. That's it. So that's an example of a graphical landing page with video. Another one that I have that I want to share with you is one of my sponsors, Acai Elite Plus. So let me go there first, and then I will just got to find it because where, there it is right here. All right, this is a different graphical landing page. So now, as you see with this one, I have my own Talk AI agent where if you click on that phone number, you can have a conversation. I'll get that information for further information, or you can go use my AI nutrition bot. It's going to ask you some questions. And then I'll get the information and the log so I can further follow up with you. See, our partnership, this is my physical e-commerce store. This is where the one marketplace is going to come in. What if you could get paid on a global customer base? That's what the video explains. How you could get paid on thousands of shoppers that you don't even know. But all it takes is one person in your shopping pod. We call that a shopper. Now, they can come up in different levels. I'm not going to explain that for you, but it's exciting. So you can check it out. I'm looking forward to helping each and every one of you reach the top. This is Howard Martell, the Home Profit Coach in KLOC. I hope you enjoy this and take care.